But the product is very comprehensive. People choose what they want to implement. We have a lot of options, as you would see right now, but everybody has a different priority and different phases of implementation. So at least major part of the product is implemented to these two clients at the moment. Home is just a dashboard. Let me go into the main feature because we are short of time. This is where what we do is some sort of a customer profile, right? Every information that we collect about the customer comes down to a single profile that you see here. And we have a super search bar. Here you can search by either customer ID or you can search by name. Any data about this customer, you can search. So let's say I'm searching as construction. It will show up. I'm searching as logistics. It will still show up. There is no limit to what type of data you can search. You can search by CEO's name. You can search by anything. We do this is because we want to cluster some of the customers as a profile in the future and monitor that profile separately. That's the whole purpose behind putting a super search at the top. Let me go into a simple profile here. Here we have a collection of data about the customer, and each one of them are separated by tabs. First is just the KYC information. This is coming through automated ways. There are government portals for company registration, company IDs. So from that we get some of the information. Then we have customer timeline. Here every omni-channel activity of the customer, be it website, be it call center, be it email communication, we put that in a chronological order and we see all the activities that the customer has performed, the activities, right? Or maybe we have sent out. Yeah.
Sorry, where do you get this data from?
So we connect to the company's information, like all the channels. So we connect to, let's say, if you have a mobile app, we connect to the mobile app. If you have websites, yes, we do that. Call center data. So we connect to all of these information and then put that in a chronological order. So why we use this data is some of these are AI triggered. For example, let's say we have sent out reminders for repayments a couple of times and there was no response from the client at all, right? So it triggers a notification saying that maybe there can be a legal action that could be provoked by not responding to certain activities. So most part of our platform, you would see it is event driven. It's all real time. It's all event driven. So the logics, we just set it up at initial stage, but the data has to exist. So we collect all the data, and based on these data sets, let's say we can set any sort of logics, right? So even the call center teams can, if they have gone through some of the issues with the client, they can simply go back and see. Or if there's an agent who's working for that specific client, he can also go back and understand the customer a little better to see his history. So there are so many use cases that can happen through just integrating omni-channel data. So the next part might be something more interesting. These statements are totally unstructured. It's a document that is slanting. It has signatures, numbers across several pages. In an instant, we are able to scan and retrieve our own financial standardized document. These are variables. We have structured it. And in next instant, we calculate all sorts of variables like total equity, EBIT, EBITDA, debt service ratios, cost of goods and services, inventory. From that, what we derive is all kind of ratios. So DSCR ratio, we have debt to equity, quick ratios, liquidity ratios, profitability ratios. The system immediately scores and it comes up with what is the strength. So previously what people used to analyze these trends through chart, there can be hundreds of ratios, right? We have so many years of data and people are analyzing these trends. Now we have AI that can tell you where is the problem, in which year what has happened, or what is the problem with the data itself. It says there's a high debt, there's increase in inventory. So it draws conclusion based on what are the vulnerabilities or what is the strength of this customer. And then we have a scoring. Scoring is based on the weightage of these different ratios. So some of them value DSCR to be the most important ratio because that covers everything. The rest of the ratios is equally important, wherein liquidity and all of that, profitability ratios are still important. But all of this analysis just happens in few minutes. Then we have a bank statement analyzer, wherein again, people upload bank statements of any Indian bank over multiple years. And our system again crunches all of that in a matter of minutes. Here we have calculation of average balances, the fluctuation in balances, what are the large transactions, how is the growth, how is their turnover like. Some of these are keyword based. For example, how we try to find turnover is based on some of their POS transactions. Obviously, we can see all the other debit transactions as well. If there are specific keywords that we can help search through all those transactions, we can summarize that. And the most important part is we see what are the recurring payments, right? So what are these recurring payments that these SME clients are doing? It could be salary payments, utility bills, vendor payments, etc., etc. And we see delay between those payments. So we see periodicity between that. And we set a threshold. Let's say wages has to be every month. And if there's a delay even in 5 days, just trigger that as a red flag. So all of this calculates as a weightage eventually, and then it hits the risk value. Same goes for utility. Probably he's paying the wages on time, but there are signs that he might delay, some of these utility bills or vendor payments. There's one more interesting part is, let's say, employee turnover. So based on the frequency of wages and number of wages that they pay, we can understand if they're scaling up their business, they're hiring more employees, which means the business is growing, which means we can give them more loan and something like that, right? So these are some valid decisions that we can make based on different data. And of course, this data is also available in Excel. So if we have all sorts of summary transactions, what is their maximum, minimum, average, debits, credits, and the actual bank statement itself. What are their loan repayments? What are their merchant POS transactions? What are their recurring payments? And is there a significant delay? So how is that calculated is based on just the standard deviation between multiple payments. We also do an auto reconciliation to see if there's a gap. If they've submitted the entire statement, it tries to reconcile against the financial statement as well. Next part is very interesting. This is something that we have done on Europe. They look out for alternate information. One of that they look out for is the social data. I'll explain through what are the social and digital data that they look out for. So they look out for customer reviews about these customers, right? How do they feel about this specific SME? We look out for Google reviews, TripAdvisor. There are so many websites depending on the segments. So we do a web scrape based on each segment and try to see what are the customer feedback about them. That is one of that. And we try to see what is the organic traffic on their website. Are there people more engaging in their website? And using the same keywords, we try to look out for their competitors as well and to see if they stand out among their competitors or not. This is a health company, and from the Google, we get the keywords that leads to their website. And based on the same keywords, we look out for their competitors as well and see what are their customers talking about. All of this becomes like a relative information. In a restaurant, in a street, are there similar restaurants nearby? And what are their customer feedbacks, and how is that relative to each other? We come up with, overall social media activities about their LinkedIn. It could be their board of directors on LinkedIn, how active they are digitally. All of these topics come into some of their scoring. Again, the weightage for this is very low, but then it's good to know why, because we track even their news articles. If some of them are going through litigation and legal issues, our AI will read the news and it will come and trigger saying that there is something legally going on here. A fundraise, or if they won some awards, and if that has been published online, and we track even that as something that is good. So this, in a nutshell, is like a overall digital plus social plus all of this credibility adds up. For the next, we have like a form for ESG. These days, there's too many ESG requirement. This is a form that we send out to the board of directors asking them to consent on some of the ESG questions, or it could be any other psychometric test. If it's a consumer, it could be a psychometric test. And based on the options they pick, we have another engine that runs in the background that scores them on real time. At last, we have, let's say, broker details. There's a broker or there's an agent who's servicing this customer, and we have all the information about him as well. Why we do this is there could be a fraudulent activity, and if that gets flagged, we'll be able to understand how these connections work, and that's why we track all of this information. But again, we can also see if there's some of the commissions that are paid. Some of those we could track on the platform itself. So right now we're showing a customer 360. If you invert it inside out, you can do an agent 360 or a broker 360, and you will see how these broker agencies are performing. You can also see how many delinquent customers are coming from each one of them. Is there any fraudulent activity that is detected in one of these networks, and how is that connected to different layers of the customers and different products? And at last, we have a chatbot. There's so many uses for the chatbot. You see, we have a comprehensive set of data, right? And people are always chasing for different questions and different answers. So why we put a chatbot is across all of this data set, across multiple years. So you can simply ask the bot, and bot will throw up the answer in seconds. So I'm just giving you an example. So I'm just asking for this specific customer. I'm just asking, give me all the financial ratio for the year 2022. Let me zoom in, if you can see. So
Yeah, I can see that.
all right, all right. So it shows up the answer in very next instant, right? Now, let me step up the complexity a bit. So I'm asking the bot to calculate delta for a couple of years, and I'm asking it to give me all the change, give me the difference, give me a percentage change. So I want to see something is, there's a growth or there's a decline in the same set of ratios. And in very next second, you see it can even perform a calculation and then probably show. About the financial data, you can ask even, let's say, what is my current credit rating? So this bot understands itself as this own customer, and it throws up answers. So it says the current rating is AA, for example. So you can see there are so many tabs. People don't have to search. They don't even have to search even the physical documents. They can simply ask the bot any question, and that would retrieve the answer as long as it exists in one of these models. And they can even perform calculation on top of it. That's the benefit. So we don't have anybody. So agent can use it if he wants to learn more about the customer, or underwriting team can use it if they want to analyze a customer, or let's say some of the board members, they don't have to wait for some immediate questions. They can use it for self-service. Again, the customer themselves can use for self-service if they want to understand what type of product they have bought, what is their current outstanding, what is their next repayment date, things like that, right? So they always go in for a call center or ask somebody. So all of that traffic can be diverted to a simple bot. This can also be integrated with your existing application. Like, let's say you already have a mobile. Yeah.
The 9 tabs that you have over here, from here, where it goes? It goes to the decisioning model?
Yeah. So on the decisioning, this is where we have another scoring matrix. So what it does is, for each of the ratios or each of the data point, we can decide what is the weightage, what is the scoring model. All of that, the underwriting team can come up. So this is what we have developed for Europe. There, they even want a flexible DSCR. So they want to see if they can take an average of couple of years of EBITDA, not just use the current year EBITDA. They want to see, let's say, multiple years of EBITDA, or they want to go ahead and change one of the debt servicing ratio. They can even do that. So for example, so they calculate it, and then you see the scoring changes. So based on the score, we can determine how are they AA or AAA, or where they stand in terms of the current credit rating.